Welcome to Java. Thank you kindly for joining. It is March 7th, 2025. It is also Friday. And as it has been an extremely volatile week on the changing of tariffs, if you will, putting them on and off, we've got quite a bit going on this morning as well. So, with this, we've got a lot to cover. Let's get started as we always do with the markets. Now, I've got the MMRI still with the calculations. Greg is working on the new version. This is special thanks to Nobody's Special Finance has put this together. Now, we're looking at still extreme risk in this market. We've been watching it decline the last few days. We are in a correction territory at this point in time. So we've got more concerningly, in my opinion, is the relative strength of the dollar is now below 104. It's 103.75. We've also got the US 10-year yield is pulling back a bit after the bonds blowing up yesterday. And this was not just the 10-year yield for the United States, but in particular, the ones that were concerning was Germany as well as Japan. Now, they were all rising globally yesterday. So when this debt starts getting out of hand and selling off, the yields spike. So we saw that happen across multiple debt markets. Now, this morning we're still in extreme fair territory. In fact, dropped a point yesterday. It was 19. So we're in the extreme area. So our daily driver is still fear. We're waiting for the jobs numbers this morning's major data that we're getting for the reports. So it's kind of on hold, little bit hesitant in the markets for these job markets. Now, as again, through all of these bond markets and all of the disruptions, we watched the dollar pull back significantly. Now, this has given rise to a couple of the other currencies. And when it does that, it is also helping with the market a little bit. So, with this, markets in the United States at the moment weak. We're showing in the futures that it should be leveling a bit. Now, I expect a bit of recovery this morning because it was kind of overcorrected yesterday. And as you know, nothing happens in a straight line, either up or down. We're also watching volatility has dropped significantly. So that helps the markets quite a bit. So as long as these job numbers aren't severely off, we could see a decent recovery today. Now we've got cryptocurrencies are their own story today. Bitcoin back up against that 90,000 level again for the resistance that it is, and then pulling the others with. Now, the big news on the cryptocurrency for today is it is the crypto summit. So, as this is saying, it's a critical moment. They've already announced that they're going to do this. So, they're calling it launching the digital Fort Knox for cryptocurrencies and reserves. Now, the important point that it came out to say is that they would not be spending taxpayer dollars, or rather converting into cryptocurrencies. But this is going to serve for now as a repository for all of the cryptocurrencies which have either been seized or otherwise attained by the United States government to date. So, along with the United States, Russia is also exploring creating a regulated crypto market. Now, this is a little different. It's not the reserve, it's an open market for what they're calling super qualified investors. Now, this is very typical to where only the elite are allowed into assets that they can make massive amounts of money on. And it is not until they have made the larger portions of the money that it is then released for investment grade for the rest of the people. So this is a perfect little example here, and it works this way in the United States as well, that the elite get it first. So, calendar. Jobs report, unemployment rate, hourly wages, all happening 8:30 a.m. prior to the market open. So we'll watch what happens there. Of course, afterwards, a slew of Fed presidents and governors, and we're also hearing from Jay Powell himself at 12:30 this afternoon. Then the only other major news is 3 p.m. is the consumer credit, which we know currently is off the charts. The existence of Americans has been pushed uh, by consumer credit for the past uh, almost year while we've been in this. Really, we are in a recession now. So they've all been purchasing on buy now, pay laters. I've covered this before. So all of that kind of pushing these numbers forward. Now, I do want to kind of touch on this to see if there is any effect in the retail sector. They've got what they're calling economic blackout movement. It's basically a boycott on some of the larger companies. In this particular instance, it's Amazon. They're trying to push back on the prices. Now they are also including Target, Walmart, and several others. But there's something much more important that I would like to point out to you in this story that came out now. I believe prices, before we leave this, will come down after unemployment rises. That's the whole point of it. And that's how natural recessions work. If they go deep enough, then they call them depressions in retrospect. But the point I want to point out is that they were tracking this. They want to know the impact of these corporations' bottom lines, saying that it didn't make much of an impact, according to Placer.ai. Now, this is an analytics company that uses phone location data to track store visits. So for any of those that have an issue, and I've taken a lot of flack with this prior, that your phone is tracking you, your phone is listening, recording, and otherwise. And if you don't believe me, you can look into this yourself. And it is widely reported in the backdrop of stories such as this one. So Placer.ai, analytics company, this is what they specialize in, is tracking. So, just a side note. Now, a lot of volatility, to go back to the economy, is on this trade deficit. Now, talking about the trade deficit, trade wars, tariffs. The United States has a trade deficit that is so massive. Uh, it is a record high now in January. Companies scrambling to import goods to avoid tariffs. It's more than just avoiding the tariffs, they're also avoiding the inflation that they were told would be incoming, as well as supply chain disruptions and shortages. Now, we've been speaking about these. There are going to be more supply chain shortages. Companies boosting this, as well as this kind of also boosts their assets that they've got on their books, and they can do more looking forward. So really, this is markers showing they are expecting, as they should, much more turmoil coming in the near future. Now, with all of this going on, it's not just local anymore. We have to look globally with all of these going on. We've got Japan is about to send trade minister to the United States because of all of these tensions. And Japan is not even one of the targets of all of these. But this is just to show the widespread uh, reach that this will have globally for the economies. Now, we've got the Bank of Japan, and this is key, saying to lean toward holding their key rate at March meeting. Now, of late, they used to kind of forewarn if they were going to make any moves, and they stopped that after some of the volatility last year due to the last presidential policies. So we'll see if they stick to this. But the Bank of Japan, if they do hike and take steps to protect their currency, could be detrimental for United States markets. Now, with all of this going on, we've got this conflicting story saying United States job growth is remaining strong. They've got a wonderful market. The economy is strong. And we know to the contrary from the signs that we are looking at, not what is being reported in mainstream media. Now, they come up with these counter stories as well that Trump is restraining Elon Musk's Doge as concerns mounting over job losses. What's going on in reality is they're having discussions about what's going on and trying to decide from there. Now, we do have a lot of job cuts, and this will be pushing the layoffs to post-pandemic highs. Now, they're asking about the labor market crumbling. The labor market has been crumbling for some time. We've been speaking about this since last October. Larger corporations we've been seeing in the news almost daily with more layoffs. So, with this, we've got the feds with their point of view saying that Bostic saying on rate cuts that directionality is very much in the air and that there is a lot shifting in the economy. And I think he's correct, but we'll see. We know they're going to cut eventually. Waller talking about the Fed independence would be bad for policy. They don't want to lose their independence, although I do agree that not all of it should be under simply political moves. So, going up to Canada, we've got Justin Trudeau retaliating with 25% tariffs on United States goods amid an escalating war. Now, this is billions of dollars worth of goods that they have put the tariffs on. The problem is this: Trudeau has a much weaker economy that he's dealing with. The people are under much greater pressure and they cannot handle this shock. Their spending is nowhere near what the American consumer is. So if he's going to play a war of attrition, he's going to have to come up with something else because United States is in a much stronger position as far as that goes now. And a little bit other news, we've also got that the United States heading to Saudi, some of the envoys to speak with Zelenskyy and regarding the Ukraine and trying to get some peace settled there. There are also rumors that the United States is attempting to effect replacement since he is considered no longer legitimate leader. So with that, I wish you all a wonderful trading day and a wonderful weekend. And until I see you again, my friends, stay free.